Will Bitcoin continue to fall after a downside breakout? If you're interested in knowing more about this, please keep watching. Bybit is one of the best exchanges I've ever used. It provides great market depth, a smooth user experience, and an impeccable interface. Click the link below to complete the KYC and deposit $100. You will immediately receive a Bitcoin contract position worth $1,000. This is truly a very generous offer. The steps are simple. Just click the link, complete the KYC, and deposit $100. You can then claim your bonus without any waiting time. Whether you want to go long or short, it will be set up for you directly without a waiting period. If the market favors your direction by 10%, your funds will have doubled, and you can withdraw the funds directly. We warmly welcome you to click the link below. Now, let's get back to the Bitcoin market. When looking at the daily chart, this is the line we should focus on. As you can see, regardless of how much the price oscillates or tests the support, you will notice that the real bodies of the candlesticks have never closed below this line. Therefore, I believe this can be considered a significant dividing line between bullish and bearish sentiments. As you can see, the prices are still staying along this line here. While there are long shadows, the bodies of the candlesticks have not closed below the line. In this area, we can observe that there are wicks as well, but the bodies have not closed below the line. Therefore, you can see that the current candlestick is below this white support line. If we have a few consecutive days where the candlesticks consistently close below this white line, then I would consider that support has been broken. However, currently, you can see that although the volume on smaller time frames, like the 4-hour and 1-hour charts, may seem decent, the volume on the daily chart is not significant. You might think that the volume appears to be quite large. That's because, on smaller time frames, it does appear that way. However, if we compare it with previous candlesticks, such as this type here, and this type here, you'll notice that the volume generated by the downward movement here is not significant or intense. It's not as strong as the previous type, which can be considered strong. Therefore, I believe we can wait for a few more days. If your position is not fully filled, please wait for further confirmation, because the volume here is not convincing. Undoubtedly, it's a downside breakout. Opening a short position after it falls below is completely justifiable, or even adding to the position. However, if the conditions that need to be fulfilled or confirmed, such as a significant increase in volume, are not met, we can slightly reduce our position. On the daily chart, we can also look at another tool called VPVR. You can observe that if this level is broken, theoretically, we should expect a relatively swift and smooth downward movement, a direct and rapid decline. Why is that? Well, if we observe the volume profile indicator here, okay, the next area where volume accumulates heavily is around 25,000, specifically around 25,200 to 24,000. So the price needs to reach at least 25,000 to find more significant support. In the current downward movement, starting from our current position at 26,300 and extending down to 25,000, there is no trading volume. If it indeed breaks through this volumeless area, the decline will likely be rapid. Therefore, at this level, we need to observe closely. If it confirms a downside breakout and doesn't show any signs of a rebound, I believe the subsequent downward movement will be relatively smooth. Compared to the previous downward waves, it'll be a smooth decline. Alright. Now, let's zoom in further to the 4-hour time frame. On the 4-hour chart, we can observe this box pattern, which is very clear with well-defined upper and lower boundaries. As you can see, after several tests, it finally gave in and started to decline. Moreover, during the decline, there was volume present. Although it didn't make a new low yesterday, the short sellers would have profited from the drop here, as it was quite a significant drop. Currently, we're getting a minor bounce, but the volume is relatively weak, and it lacks strong momentum. If the price tests the lower boundary of the box, where it fell from, and then resumes the drop, it would be acceptable. We can even consider adding to our position at this level. The specific extent of adding to the position, and whether or not to do so, depend on the strength of the rebound, as well as the importance of volume, and the price action of candlesticks. Let's continue observing whether we should add to our position at this point. However, if the scenario unfolds in the opposite direction, and the price starts to move upward, stabilizes, and continues to rise, if that happens, it would be dangerous to stay in the position. We must exit. Currently, the volume is still relatively low. The advantage definitely lies with the bearish side. Now let's switch to a smaller time frame. The 1-hour chart. The 1-hour chart. As you can see, when we analyze the recent downtrend from a bearish perspective, if you currently hold short positions, you definitely wouldn't want to see a strong rebound. A strong rebound could indicate strong buying support below. So, if we are expecting further downside, it wouldn't be smooth or fall deeper. Based on the current situation, the rebounds appear weak. If we focus on this recent downtrend, the rebound only reached 38.2%. Currently, it can be considered relatively weak. However, when this particular candlestick appeared, I already had the feeling that even if there were more downside, it wouldn't happen immediately after yesterday's candlestick, because this candlestick had significant trading volume and a long lower shadow. So, if your position is bigger than anticipated, it might be wise to reduce it slightly. From the current perspective, the bearish side is still more advantageous. Let's look at previous instances, where we had smoother downtrends. In those cases, the rebounds were consistently weak. Let me provide a few examples. On the daily chart, which sections were the smoothest and most profitable? This and this. These two sections. The bears dominated the market. Holding a short position here would have given you significant profits. Alright, let's take a look at the downtrend and how it unfolds. You can see that during the downtrend, the price rebounds in a very weak manner. For example, this one. Initially, it was a consolidation. After the price declined, instead of a strong bounce, it moved sideways and then continued falling. Then, there's a small bounce followed by a sharp drop. This pattern of small bounces and sharp drops repeats. What we expect is this kind of price movement, without significant rebounds. If there are substantial bounces, it may not result in a smooth downtrend. Let's examine another example during this period. At that time, the decline was quite smooth, and I remember it vividly. It fell on the weekends. Let's examine the chart. During this downward movement, you can observe a pattern of decline, followed by weak rebounds, further decline, sideways consolidation, and then another round of decline and consolidation. Eventually, there is a sharp drop in price. The decline continued until we saw a significant increase in bullish volume, indicating a potential halt to the decline. But during this period, holding a short position would have definitely yielded substantial profits. Now, we need to see if the current price movement aligns with the characteristics I mentioned earlier. Now let's take a look at the US stock market. In the case of US stocks, there was a false breakout on an important S/R level. It's worth noting that the current state of the US market faces certain challenges, which we can discuss in detail in a separate episode. In the chart, we can see that the price made a false breakout to the upside but failed to sustain it and quickly retraced. This false breakout is considered a bearish signal, especially given the significance of this level. We can observe that this level has acted as a strong resistance multiple times in the past. Here, 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 and here. It was a strong resistance level. The occurrence of a false upside breakout at this level indicates a bearish sentiment in the market. Alright. Thank you. You're welcome to like and share my videos, and subscribe to my channel. Turn on the little bell button to show me your greatest support. Thank you so much. Bye bye.